How close are we to an event that wakes everyone up? I will tell you, in my gut, and I will state it publicly, I do believe before the end of the year you will see bank failures and bank bail-ins. And everything changes when that happens. Everything. Because most people don't even have that on their radar, don't even think it's a possibility. But I'm here to tell you that I believe it's not only a possibility, but a strong probability.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for August 21st through August 28th, 2023, while supplies last. This week we feature Silver Buffalo Rounds and 10-ounce Silver Asahi Bars, both at just $2.50 over spot. The Silver Buffalo is made by various private mints across the U.S., with the design based on James Earl Fraser's iconic Buffalo nickel. They are highly recognizable and one of the most trusted types of bullion rounds available. These 3/9 fine rounds come 22 a tube and 500 to a box. And at just $2.50 over spot, they offer unparalleled liquidity at a price lower than many high-volume bars. Next, the Asahi Refinery continues the legacy of famed private mint Johnson Matthey, which they purchased in 2015, and refined with the same attention to detail, cementing their status as an LBMA certified supplier. Their 10-ounce bars are 3/9 fine and on sale for just $2.50 over spot per ounce. They are also IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this returning guest whom our viewers look forward to quite avidly for our weekly market update. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, August 22nd, 2023. Andy, thanks for coming back on Liberty and Finance.
Thanks for having me, Don. Again, always good to be back with you. Appreciate it.
Well, our viewers always look to you for insights, not only inside the precious metals supply chain, premiums, availability, and everything, but also what's going on in the bigger picture. This is a particularly potentially eventful day. We've been talking about it for months, if not quarters, if not years, and based on Jim Rickard's speech at the Rule Symposium and your interpretations and kind of expounding further on some of the things that he's watching for out of the BRICS Plus nations having their gathering today and this week in Johannesburg, South Africa. Hoped you could bring us up to your latest observations and research on what we maybe should be expecting or maybe shouldn't be holding our breath about as far as the impacts of that meeting on the position of the Western financial edifice, including most prominently the U.S. dollar as world reserve currency. Because they were said they were going to be announcing or talking about discussing a trade settlement currency. So what do we know about what's going on with the BRICS trade settlement currency and the impacts that it may have on our lives?
You know, look, and that's a good question, of course. The trade settlement currency is coming. Will it be announced this week? Maybe, maybe not. There's lots of conflicting information. You know, James said yes, and one of the representatives from South Africa said no, but we know it's going to be issued. We know that they're the countries that are buying copious amounts of commodities, and by all measures, we believe that they will be used, or commodities will be used, to back a new reserve settlement currency. That's what we were told by the Russian finance minister on many occasions. And we've already defined the fact that gold has been revalued or reclassified as a riskless tier 1 asset. Makes very good sense, in other words, to believe that anything that would rise to challenge the dollar or the system would need to be something that would be trusted, where we wouldn't have to rely so much upon those that are issuing the currency rather than what is standing behind it. I think that's for sure. And look, whether there is no earth-shattering announcement this week, the dollar's dominance is being weakened by the day. And you can see it, you can feel it, even just looking just last week, India did a major oil deal from Abu Dhabi and paid in Indian rupee instead of US dollars. And for many years, that would not have been acceptable. That would have been met immediately with all sorts of backlash by the West. But this is just more of the same thing. We saw France do the same thing with the United Arab Emirates, liquid natural gas deal paid in yuan. And we see Brazil doing the same thing in selling their corn and their commodities to China for yuan. And so we are witnessing a continued de-dollarization. And as I've said since that conference, done again and in all the podcasts I've done subsequently, to me, what is really relevant in this meeting, because I do believe that a commodity-backed currency is inevitable. I truly do. There are two things that are really very important about this meeting. Knock it off. The first one would be that we see Saudi Arabia be admitted as a full member of the BRICS nations. And we already know that they've applied to the Shanghai Cooperation Organization and to the BRICS New Development Bank. The Shanghai Cooperation Organization would be number two to this puzzle. In fact, let's give it three big events. One, Saudi Arabia. Two, the Shanghai Cooperation Organization being admitted to the BRICS as well. Every one of their delegates, which is, of course, the largest regional financial and military organization in the world, have been invited to the BRICS meeting in Johannesburg. They are there, and they are suspected to be admitted as members of the BRICS Union as well, along with the Eurasian Economic Union. And these are all the countries that are, I guess you could say, in between Russia and China, those that end in stan, like Kazakhstan and Kyrgyzstan and even Pakistan, all these countries that are in the Eurasian Economic Union that are also rumored to be joining the BRICS nations. You are building this very formidable alliance of countries. And if we come away from this meeting with Saudi Arabia being announced and the Eurasian Economic Union and the Shanghai Cooperation Organization also joining forces with BRICS, you're dealing with critical mass. You're dealing with an expansion of credibility, of military might, of GDP, a growing creditworthiness, a growing credible and formidable foe. I don't think we need to see the fact that this new currency system, settlement currency, or whatever you want to call it, one that we suppose will be backed by commodities, needs to be issued this week. I know James Rickards sparked a lot of interest and hope that this indeed is what would happen. And I believe ultimately he's right. I just don't know if it's going to happen this week or somewhere down the road. But in a world of probabilities, I would say that there is a very high probability that before the music stops, indeed, that is what the BRICS settlement currency will be. It will be one that is tied to commodities to give it veracity, to give it trustworthiness, to give it credibility, to give it immutability. These are the things that will be needed, of course, on the rails of a distributed ledger or on a blockchain technology to show the veracity, to show the world the immutability, to give it transparency. These are the things that will be needed to make this new system credible. But by all counts, by everything that I see, it's all but inevitable. Just don't know if it's going to be this week or not.
One of the things that I've observed over the years that we've had our channel, starting out as Reluctant Preppers back in 2013 and now Liberty and Finance for the past 3.5 years, is that the pace of change, in my view, seems to be accelerating. As you mentioned, these milestones that we are passing and that others have warned us about or warned us to watch for. It used to be, Rob Kirby, bless his soul, and others have passed away, and they were having us watch for these things to happen, and they're happening at increasing frequency, rate of change. Despite that, we've talked about this recency bias that affects people, where we become very quickly acclimated to a rate of change, and then even an increasing rate of change seems to be the new normal. We've had some rather skeptical comments underneath different videos we've done or different interviews, where people are saying, nothing new here today. This is the same old rehash stuff. It's like, as the cracks continue to form in the dam, as the first drops of rain are falling, as Noah's finishing building the ark, people still scoffing, still shaking their heads, still being naysayers and clucking their tongues. It's like there's almost nothing that would satisfy them. And I remembered a quote, I just looked it up. William James, who is generally considered the founder of American psychology, quoted, this is back, he lived until 1910. He says, when a thing is new, people say, it's not true. Later, when the truth becomes obvious, they say, it's not important. Finally, when its importance cannot be denied, they say, anyway, it's not new. So it's like, as you're pointing out these new and then true and then important things, just wanted to remind people that we all have a tendency to rapidly adjust our frame of reference to the changing landscape around us. And that doesn't mean it isn't happening just because we're becoming accustomed to it. This rapid rate and increasing rate of change of these linear progression of events, as you've talked about.
Yeah, well, and that's just it. And I think there is a linear progression, but I don't think this is going to be very straightforward. This is a deal that they can't really announce these things until everything is in place, until all their ducks in a row. And while I've been very consistent in saying that there will be a commodity-backed currency, most likely a gold-backed currency, it was James Rickards who announced a date. It is James Rickards who said it's going to happen here. And I was very clear in saying, look, I respect him for doing that. He has the courage to do what I won't, and that is to announce a date. And I think it's wrong to do that in general, because then you get the naysayers saying, see, I told you so. What I take away is a bigger picture, a macro picture. You can see the alliances that are being formed. To me, that is exactly what is important. That's why I say if the Eurasian Economic Union and the Shanghai Cooperation Organization do come together at this meeting, also announced by Mr. Rickards, something that I pretty much understood because I've mentioned those two organizations in virtually every video I've done, not because I was saying that they're 100% going to combine, but because the crossover in all of the memberships is too hard to ignore. And it just became quite obvious. And quite frankly, I would assume that you see a large participation from every one of the countries in the Belt Road Initiative. These are all very symbiotic. They all share very similar traits. You look at the Belt Road Initiative, which is the largest infrastructure project in human history, and the West isn't part of it. The United States is not part of it. But many of the countries that are in the BRICS or have expressed interest, or in the Shanghai Cooperation Organization, or in the Eurasian Economic Union, or any of these growing unions, they're there. And so it's hard to ignore them. To me, that is the bigger picture, rather than focusing on one specific thing that I do expect will happen, but not to be disappointed if it doesn't, because to me, it is the growing union, the solidification of security, both financially, militarily, that I think is most important here. And when we talk about gold being a part of it, I just read a quote this morning from Herbert Hoover, who in 1933 said, we have gold because we cannot trust governments. Well, I think that really rings true, especially with the United States, in what we have done globally to fray the trust that we once had, whether it be in terms of weaponizing the dollar or weaponizing the Justice Department or the FBI. The world looks at what's happening in this country and wonders, is it the same United States that it always used to be, where even when we are a country that has close to 130 times debt to GDP, which is technically a banana republic, it was the trust of this country and of our markets that would, even when the dollar by all measurements should be falling, was growing. This is the Brent Johnson milkshake theory that, it's the cleanest shirt in the dirty laundry basket. Well, it's one of these deals where I would argue that the trust that we have once really earned and deserved is beginning to fray. And so all of these things are the rallying cry to get people to the table on that side of the table. But as Herbert Hoover said, it is the gold, the backing, that ultimately will give trust and immutability to a system that is sorely lacking it. And that's why I think the probability is great that we see that. And quite frankly, I don't know if I've been distracted or just focusing so much on the things that are happening in this country that are, I feel, really part and parcel of the same problem: erosion of trust, of credibility, erosion of unification. And I wonder. I ask myself continuously: is the Fed raising rates to fight inflation, or are they doing it to destroy what is left of our once booming economy? And I think you have a situation where the Fed kept interest rates low for so long. They incentivized people to get in over their head, take massive amounts of debt, and take on speculation that they wouldn't have otherwise done. And now you're seeing rates rise at a rate faster than we've ever seen before, albeit I don't think anywhere near as much as they should have gone, but maybe slower in its trajectory. But nonetheless, the stress that we're seeing put on all of these institutions, like the banks, for example, where in the regional banks, the average return in a savings account is 0.5%, and yet you can get almost 6% in a 6-month treasury going directly to the treasury at treasurydirect.gov, or 5+% with overnight liquidity in a too big to fail bank in a money market. Why aren't the banks raising their savings rates to stop this exodus? Why isn't the Fed no longer allowing money markets to put their money into the overnight reverse repo market? These things are happening, and this is going to happen whereas rates continue to rise and corporations have a harder time staying in business and lay off people, and we see the economy really slow. You're going to have a very hard time for people to keep up with their debt obligations. And I say this because there was a quote that most people are familiar with. Thomas Jefferson said about 300 years ago, he said that if the central banks were allowed in the United States to control the money supply, we would wind up renting back the land that we conquered. They will do it first with inflation and then with deflation. Well, think about it. The inflation part has already happened. It's already been accomplished. And most of the people who have assets have overpaid for them: their homes, their cars, their commercial real estate, their stocks, their bonds, etc. And all of this at low rates, which was incentivized. It incentivized people to do this, to speculate. And a lot of these assets are rapidly becoming liabilities in a slowing economy. As rates rise, you're going to see companies go out of business that can't hang on anymore. You're going to see banks fail because they watched so much in the way of their deposits leaving, where it wasn't just Fitch. Now we see another, who did it today? Moody's, I think it was Moody's. They downgraded another batch of banks. And so S&P, sorry. So now we have 3 rating agencies that have downgraded U.S. debt and U.S. banks. This is getting real. And it's their way of saying, hey, we told you so. And as that happens, do the central banks or BlackRock, or do they buy everything at pennies on the dollar? When commercial real estate, when residential real estate, when cars, car loans right now are 7 and 8%. They used to be 0 for 72 months. All of this debt that was incentivized by low interest rates and easy money has rapidly reversed. And do they not see what is happening? The rest of the world sees what's happening to this country, those that are paying attention. So, I think that this is becoming, as you said, rapidly accelerating. And that's the term that I've used a lot lately: logarithmic decay. Little by little by little, then all at once. It's beginning to accelerate. We are getting close to that cliff where it all at once happens. Don't know where we are, but I think it's getting much closer, whether it be inside the country, whether it be outside the country. And the BRICS is just, I think, another piece of the ever-growing puzzle, a reaction to what is happening. So does this all come to some sort of a head here in the next few days? Possibly. I doubt it. But I think what we take away from it will be that Saudi Arabia has chosen sides, that they have supported reductions in oil production. They have told everyone that they'll take other currencies for oil when they were at the meeting in Davos. And they are partnering with, the Shanghai Cooperation Organization, the BRICS, and all the members of the Belt Road, all of which the U.S. has nothing to do with. you can see the big picture forming. And that's what people need to look at, the macro perspective. Do not look at the rustling leaves. In other words, are they going to make it today? Is it going to switch to gold-backed currency in the BRICS to challenge the dollar? That's the rustling leaves. Look at the big picture. Look at the formation of all of the countries joining together, in a very methodical manner, and making sure all of their bases are covered before you see a paramount switch like that, which, in my mind, the probability of it happening is extreme. Of it happening this week, don't know, but ultimately, yeah, I think there's no way back from where we are in the grand scheme of things, and I think it's inevitable that indeed the BRICS will accentuate themselves in that manner. I just don't know if it's this week or not.
Another thing we've been hearing about, I wanted to keep poking at this thing about the banking system, is that some of the biggest players in hedge fund managers and others have been placing their bets against the broader markets. And you almost, when you look at things as far as being a force of nature versus human caused, here with these Moody's and S&P downgrades of the banking systems, we look for things that are true in an era where so much things are untrue, and it seems like, it's about time somebody started calling out the banking edifice as being in very fragile house of cards. But on the other hand, that can come as the pin that pricks the bubble. And when you've had very large players placing huge bets against the market, and then these specific actions definitely can be things that can accelerate the coming of that collapse. A lot of people point to the cyclical September, October as being a weak time in the markets. Your comments about this, confluence of events all coming at the same time.
Yeah, for sure. I mean, Warren Buffett, the greatest value investor of all time, has $147 billion in short-term treasuries. He's waiting for a market crash to come in and scoop up things at pennies on the dollar. It's exactly what I was saying about the broader scheme of things where, rates were low, money was easy, incentivized people to take on debt. Now things go in the opposite direction. And if you lose your job, you're screwed. Most of the people in this country are paycheck to paycheck, even those earning over $100,000 a year. Paycheck to paycheck. You lose your job, you're dead in the water. How do you pay a $500,000 mortgage at 4%, which sounds really great at 4%, but how do you pay it when you lose your job? And, so this is a situation where you see a guy like Buffett on the sidelines, in essence, with short-term treasuries, 6 months or less in duration, with nearly $150 billion. Or look at Michael Burry, who just put 93% of his entire hedge fund portfolio, $1.6 billion, short the S&P and the broader market. So, yeah, you are seeing that. Even rumors of BlackRock moving away from the U.S. equity market into more of the emerging markets because they see greater potential there. This is a company with $9 trillion on their balance sheet. And so, yeah, I think indeed what's really interesting about all of this is that the majority of the debt now is owed to the American public. You're seeing a phenomena where the big central banks of the world are dumping U.S. treasuries. But who's buying them all right now? Oh, it's the public who's leaving the banking system and buying treasuries, filling that void, if you will, destabilizing the banks and putting more of the risk squarely on the American public, which again leads me to believe if you are going to default and issue a new central bank digital currency maybe in 2025, as the Bank of International Settlements told us there has to be working CBDCs by then, it's much easier to pay back the American public with your modern monetary theorist, Lael Brainerd, and her central bank digital currency. It's much easier to do this when you think of Jared Bernstein, the lead economic advisor to the U.S., who wants to lose the world reserve status and has written extensively about that. It's much easier to do these things if you are a central bank digital currency with, modern monetary theorist. If you pay back the American public, all they need to do is sign on the dotted line and accept the new central bank digital currency. Are we priming the pump for the event that allows people to begrudgingly take the new central bank digital currency because the majority of the debt that is owed by the U.S. government all of the unfunded liabilities are to the American public: Medicare, Medicaid, government military pensions, Social Security. And now the bond market is shifting away from foreign investors largely into the American public, who has been gobbling them up hand over fist in search of yield and protection away from a systemic banking industry. I mean, it's a perfect storm waiting to happen. And to your point about the legendary investors or the value investors, yeah, I mean, Michael Burry made his reputation. That's the big short guy. He made his reputation by betting against the subprime market. And same thing here. Buffett is looking for value. He only buys value. Well, if he only buys value, what's he doing in short-term treasuries that are yielding a negative real return? Well, he's waiting for something to happen where he can swoop in and buy things at a fair value, where over the last several years, because of the distortions in interest rates and easy money, what is fair value? What is price discovery? It's hard to figure that out. But look at it just in terms of the housing market, right? 3% in 2021 and the beginning of 2022 on a 30-year mortgage. Now you're at 7.5. That's up 2.5 times. So, 1.5 times, it's doubled, and then another half. At what point do people start to realize that, things are becoming a little bit unaffordable? And I think when you look at the fact that the public is really not in a position to handle any type of massive event, there will be things that are fire sold when you see whatever problem it is that ignites this fuse. And I do think it'll be the banking sector that lights that fuse. And I think when you see S&P and you see Moody's and you see Fitch come out and say these things about the banks and about the creditworthiness, at least they said something. At least they got out there and said, well, we told you so. When you see Janet Yellen say to the representative from Oklahoma, no, we will not bail out banks unless they're too systemic, they will be bailed in. You talk about recency bias. Most of the people in this country don't even know what bail-ins means, but when they find out the hard way, like that, everything changes. And that's what I think will happen. There will be a bank bail-in. There will be a bank failure, maybe several big ones. They will be bailed in. They will not be bailed out, and the public is going to freak out in a massive, massive way, which will only beget more and more bank runs, which means the banks have to sell their long-term duration treasuries, which will push interest rates up even more on those assets, which then crumble the banks even more. It obliterates them. It's a self-fulfilling prophecy, and people don't see the big picture. They just look at the rustling leaves. They don't take a step back and look at the whole forest, and that's what you have to do right now. People are too short-term oriented in their thinking. They employ too much recency and normalcy bias, and it will be to their own detriment. And I've never been more convinced of that ever. And you take a step back and look what the biggest money in the world is doing and how they are de-dollarizing, how they are not only accumulating copious amounts of commodities, but removing any and all counterparty risk, realizing that they are not simultaneously someone else's liability unless they don't hold them in their own possession. And that's what they are doing. That betrays so much of the rhetoric, so much of the counterintuitive price action. And to me, I sleep well at night knowing the ultimate outcome. Almost everything I've ever talked about has come true, Dunnigan, because I use mathematics, economics, and logic. But I'm never right on the timing. The one thing that happened, which blew me away, was the BRICS. Yes, I got it right on timing. I don't know how it all plays out, but I think I will be right here in a banking crisis that lights the fuse, a big fuse that really gets the ball rolling. And interest rates are going to rise even more as more and more people flee the banks. This is a problem, and that will not be lost on our foreign creditors and our foes who will join in. And when there's this chaotic moment as the dollar is kind of circling the drain, that is when it would be the appropriate time for these nations to make an announcement. Oh, by the way, we are going to issue a new settlement currency. And Saudi Arabia says, by the way, we're going to now take that new currency for our oil sales. And that's when things go from bad to worse in the blink of an eye. And that's when it goes little by little, then bang, all at once. And if you don't see that, you're not comfortable with trying to figure out where things are going, figure out this timeline and the inevitability of it or the probability of it, well, that's what I try to do, fill the gaps. And I will be wrong on certain things. I will be wrong on my timing on many things. But in the end, when you base your decisions upon mathematics, upon old school logic, and upon economics, you have a greater chance of being right than not. It's just a matter how it all plays off and out. And to your point, what lights the fuse? My bet, it's on the banks, less the BRICS. Once the fuse is lit, that's when, if I were the BRICS, I would turn on their side of the things. And then it really begets craziness. So I don't know, was it the chicken or the egg? In my mind, the BRICS will come after these big announcements will come after some sort of event here that will then give them not only incentive to do this, but greater probability of it succeeding.
Unfortunately, you're probably right. And when I say unfortunately, because usually the next thing that happens then is a crisis. And in modern eras, maybe not just modern eras, but certainly recently, there's been a crisis response already prepared, already planned out, already thought up, already all 1,000 pages that nobody has a chance to read, so we got to pass it so we can see what's in it, that will be foisted off on the American people, that inevitably is named the opposite of what it does, takes away our freedoms, takes away our Constitution, takes away our privacy, and makes us further enslaved to a system that we can't escape from. For people who've been through that before and they've seen that happen and they don't want to be completely victimized by that, but want to take a position that's outside of the system, you have continued to provide weekly specials that give people an affordable way to take some of their hard-worked fruits of their labor, some of their nest egg, off the table, off the merry-go-round, out of the casino, and get it into something tangible and hard, something they can hold in their hand outside the system that's stood the test of time. Can you give us before we even get there, you can mention what the special is, but would you also talk to us about where you see us in that availability of the ability of people to take action? Because so many people are kind of like waiting for this October surprise so that then they can swoop in and exercise their strategy of scooping up things at bargain prices in terms of precious metals. Will there be availability? Will there be the ability to even get through and get your order in and get et cetera?
I mean, I would like to think so. I mean, you see, whenever I talk about a shortage of supply, then again, I think of the mainstream jumping in. What would get the mainstream and their attention to precious metals more than anything would be a bank bail-in. Now, remember, this is not just hyperbole. In the 2009 Dodd-Frank Act law, it says banks need to be bailed in, not bailed out. That's why there was so much pushback against the Fed and FDIC for bailing out Silicon Valley Bank, which had 10 checking accounts with $14 billion in them for 3 years. I mean, you wonder, where was the FDIC then? Where was the risk management of the bank and of the corporations that had $14 billion in a checking account earning no interest, and with a $250,000 FDIC guarantee? Why were they bailed out? Is there something bigger here than meets the eye? I don't know. I mean, there is a fine line between conspiracy and reality. And when you talk about how fast things can change, Keith Neumeyer just came out and said, for the first time ever, he's seeing car manufacturers at these symposiums he's speaking at these conferences, where they're coming in there and going directly to companies like his to disintermediate everything in between and get their silver that they need for industrial applications right there. And when you see solar panel companies and car manufacturers going to economic conventions to talk to guys like Keith Neumeyer, I mean, how fragile of a system, at what point, where are we on this scale where real quick something happens, there are deals already being put into place by guys like Tesla, Elon Musk and Tesla, or Sony, or Apple, or Samsung, any of these corporations who say, fine, we're going to just take everything that you want to give us. And we already see the drawdowns off of the exchanges. Ted Butler says there's a massive shortage in commercial grade bars, that the majority of the bars that are on the exchanges are not for sale, that the open interest is many times what is available for delivery, that we are really close to that moment. Well, right now it's plentiful. The problem is that here again, people are looking at it backwards. You don't wait for the confirmation. You don't wait for the event. You don't wait till there's a hole in the boat to blow up your life raft. You know, if you ever have gone on a cruise before, right when you get there, within the first hour, they do a drill on what happens if the alarm goes off and the boat is going to sink. They tell you where your life jackets are. They tell you where to go to, where to get in line for the boats. the lifeboats, it's not like they're going to start building them the minute they hit the iceberg. And so I guess the point of it is those people who are waiting for an event before they buy they're not very astute. And I say that with all due respect. I mean, here again, if you're buying this to make a profit, then maybe you look at things that way. If you're buying this because you need to protect yourself against the inevitability of what you see coming, of the indebtedness of this country, of the mismanagement of the world reserve currency, of the weaponizing of the dollar, of the weaponizing of what it is that made this country what it is, the Justice Department, the legal system. To me, that's terrifying. And I think these are the reasons why you accumulate gold and silver before it becomes obvious to everyone else. Because once it becomes obvious to everyone else, you're done. You're crowded out. The premiums go up. The delivery delays are accentuated. But here's the interesting thing. Yes, we saw an expansion, a much greater expansion into the mainstream over the last several events, whether it be COVID, whether it be the banking problems. We saw an expansion. But by no stretch of the imagination did we see a substantive expansion. Rick Rule still says, at the conference I saw him at a few weeks ago, that less than 0.5% of the public or of the whole investing complex is invested in precious metals, less than 0.5%, with the mean over the past 40 years being 2.5%. You just get back to a lowly 2.5% allocation because the public wakes up and sees a bank like Truist or US Bank bail in, and bang, people lose millions and millions and millions and millions and millions of dollars, and oh my goodness, this is real. Now you're competing with the entire stadium, right? You're competing with everybody, not just the small orchestra that we've been talking to, or the choir, rather, I should say. And now you're talking to everyone, including the people outside the building who are running as fast as they can to do what they can to protect themselves, which will only exacerbate the demise of the banking system, which will only raise rates, which will only create more chaos. If you don't see how this can snowball out of effect in a matter of minutes, hours, days, you're not really seeing it clearly, in my opinion. And so you don't want to wait to develop your core position. If you do, you're making a monstrous mistake. Yes, you can cost average your acquisitions after you have your core position. That's like buying a shotgun to protect your family. God forbid you ever need to use it, but waiting for bullets to go on sale. I will acknowledge that this would probably scare most criminals away, but if the rubber meets the road and you have to use it, you will have wished that you didn't wait for the bullets to go on sale to protect your family. And the same thing is true here. Once you have a box of bullets, you can at your leisure cost average to buy more. But until you have that in place, I think you're making a monumental mistake, because this time it just seems different. This time, to what you said at the beginning of this talk, the acceleration of events that have potential really drastic and catastrophic outcomes, without trying to sound, without trying to be dramatic, I think there are these types of outcomes. And so waiting is wrong. I would argue almost everything we have is on sale, at least in comparison to where it's been for a very long time. And while we continue to bring things right now that are specifically on sale, everything is on sale, in my opinion. We are selling the Asahi 10-ounce silver bars for $2.50 over the price of silver per ounce. Asahi is one of the name brand refineries, maybe one of the most respected in the world. They bought Johnson Matthey several years ago. I believe their production or the facilities in Utah. So it is made here in the States, but it is a Japanese company, very, very high quality, very, very well respected amongst the industry in terms of liquidity and demand, and just another way to protect yourself against what is coming. But waiting, done again in this environment, which is different than anything I've ever seen, I think you have too many potential black swans that can very quickly end up making you wish that you would have at least dipped your toe.
Are we continuing the 1 ounce Buffalo's silver special as well?
1 ounce Buffalo rounds at $2.50 over spot, the same price, is also a special and a great value. And it's ironic, too. You'll remember that over the last several years, maybe the Buffalo rounds were the most difficult thing to keep in stock. They are very well thought of, again, throughout the industry, and the most cost-effective way to buy silver, typically in a 1-ounce fashion. So whether you're buying 1-ounce rounds, 10-ounce bars, or any of the sovereign mint coins, honestly, since late 2019, there hasn't been a better value. And I would argue never been a better time to realize that value. And then the whole ironic thing about it is that you could basically say with accuracy that these are the lowest premiums and the best availability we've seen in that period of time. It's counterintuitive. The public is really not focused on this because of the recency bias, because of the normalcy bias. And I ask you, all of you out there, where are we on this logarithmic scale? How close are we to an event that wakes everyone up? I will tell you, in my gut, and I will state it publicly, I do believe before the end of the year you will see bank failures and bank bail-ins. And everything changes when that happens. Everything. As most people don't even have that on their radar, don't even think it's a possibility. But I'm here to tell you that I believe it's not only a possibility, but a strong probability. And that, to me, is the fuse that lights this incredibly crazy environment that we are in and turns it in from a small kindling fire into a 5-alarm fire, a bad one. And maybe that wasn't the best thing to say after the horrific things that we saw in Hawaii, but I hope you get my point. I think it is one of these deals that can really, really accelerate and accentuate things here with problems with the system.
Actually, I'm going to lean into that comment about Hawaii about fires because, again, when we interviewed Brad Harris, the founder of FullSpectrumSurvival.com, he reminds us that the official warning will always come too late. You can apply that to how many major problems that have happened where people's lives and well-being, their financial futures, etc., were at stake. The official warning will always come too late. So that's why people are here. They're watching independent media because they're not finding out what they need to know from official media sources, and we're here to help them. We're here to help families to take care and to take precautions and to prepare for what's coming. Not just what's coming, but what's actually happening right under our feet with the destruction of our savings, our earnings, and our retirements. Andy, wish we could go on and on. Thank you for making the time to be with us here on Liberty and Finance, and always grateful for your presence here.
I wouldn't miss it, done again, and I'm the one that should be thanking you, and it certainly is my pleasure. I hope you and everyone else out there has a great rest of the week. Being that this will come out later on tonight, which is the first night of the BRICS Symposium, I'm sure there'll be a lot of things to talk about next week. And if by chance something earth-shattering comes out of the meeting here in the next day or two, you can always count on me to jump on for an impromptu conversation. But it will be interesting to see what the outcome is, and look forward to picking up where we left off and talking about it next Tuesday, if not sooner. And
everyone, we've heard this before, but again, just a reminder, if you haven't already signed up for our free newsletter, no time like the present, just jump over to libertyandfinance.com, libertyandfinance.com, put your name, your email address, click submit. Then you have to confirm on the confirming email. You'll get one email in your inbox each day. It'll include all of our interviews with Andy, all of our other guests, and our weekly specials. You'll have it all once per day in your inbox. You won't miss a thing. libertyandfinance.com. Andy, thanks for joining us.
Take care, Donegan.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.